Hello, everybody. This is Bennett Tchaikovsky. Welcome to Property, Plant, and Equipment. This is an equipment sale when we have a loss situation. So this is by the accounting professor, yours truly. All rights are reserved. Any redistribution is expressly prohibited without the prior permission and consent of the author. Yours truly is Bennett Tchaikovsky, also known as the accounting professor. The opinions expressed herein are those of myself, the employers, or affiliated organizations. Okay. So when we go through and are doing equipment sales, remember, we have to go through and do a few different things. We keep the equipment off of our books. We also have to go through and calculate the amount of accumulated depreciation we took up until the date of sale. We then have to take that amount of accumulated depreciation off of our books. We receive the cash. Then the last part is the balancing. Over here, if we have a loss, if we need a debit to balance this, we're going to have a loss, kind of like an expense. If we need a credit to balance it, it's going to be kind of like, it'll be like a gain. So if we kind of, again, so the first thing is how much depreciation was taken. You got to figure out that accumulated depreciation, figure out the cash, and then basically remove it, and then going through and doing the final balancing. As I said in the previous video regarding the gain, this is something that you want to go through and memorize. Okay. So LAX purchased equipment on August 1st, 30/30 for $400,000. The equipment had a salvage value of 40 and was depreciated using straight line, having a useful life of 6 years. On 5/31/34, the equipment was sold for $27,000. Okay. So now that we're over here on this one, I'm going to do things a little bit differently, right? So the first thing we want to go through and do is we know that over here, 5/31/34, we sold the equipment. What's my journal entry? Well, I know I'm going to have to remove the accumulated depreciation with a debit. I'm going to be receiving cash, and I actually got cash of $27,000. I also have to take the equipment off of my books, right? The equipment had a value of $400,000 that was on my books. And then over here, if I have a gain balancing, or if I have a loss, this is also going to be a balancing entry. And this is going to be to record sale of equipment. Because remember, as we're going through and looking at this, right, what is our goal over here? Well, what is our goal? Well, we have to get this asset off of our books. So we have over here, we've got this equipment sitting on our books. Was sitting over here at 400,000. We have to remove it from our books with a credit, right? We want this balance down here. This has to go down to 0, right? So right over here, this is going to be at 0. So that's our equipment, okay? Our next one over here is going to be our accumulated depreciation, not air conditioning, but accumulated depreciation. So when we look at our accumulated depreciation, we have to figure out, well, how much depreciation did we take on this asset during 2030, during 2031, during 2032, during 2033, and lastly, during 2034, when we actually went through and sold it. So we have to figure out how much depreciation expense did we take cumulatively over this period of time. So when we look over here, we're going to do this straight line, which is going to be my acquisition cost minus my salvage value divided by my estimated useful life. My acquisition cost is $400,000. I purchased it on August 1st, 30/30 for $400,000. My salvage value is $40,000. Okay, my estimated useful life is 6 years. So this is going to be $360,000 divided by 6. Or this is going to be $60,000 per year. It's just a coincidence that it's basically the same amount as it was previously. So over here, right, because I use the asset the full years of 2031, 32, and 33, This over here, I'm going to take the full amount of the depreciation during these years, right? But I'm in a little bit of a dilemma with 2030 and 2034 because in 2030, I bought the equipment on August 1st. So I used this from 8/1 through 12/31. In 2034, I sold the equipment on May 31st. So over here, I use this from 1/1/34 through 5/31/34. So I need to go through and compute depreciation during these partial periods. So how many months? 30, August, September, October, November, December. 1, 2, 3, 4, 5. I'm going to go ahead and take 60,000. I'm going to multiply that 60,000 by 5/12, right? Because it's 5 months out of the year. So I'm going to 25,000. So right over here, this is 25,000. In 2034, January, February, March, April, May, okay, right over here. So this again, 1, 2, 3, 4, 5. This is going to be 60,000 times 5/12 because I used it for 5 months during 2034. 60 times 5/12 is going to give me 25,000. So the total amount of my accumulated depreciation is going to be $230,000. So when I come over here, right, I've got to take this amount off of my books. So I'm going to do that over here with a debit, right? So this debit over here is going to be how I'm going to take that off of my books. This balance now goes down to 0. So now what I need to do is to say, all right, what do I need to my T account or my journal entry? Well, I have 257,000 of debits. I have 400,000 of credits. So to balance this through, I'm going to need a debit of 143,000. If I have this 143,000 over here, I'm now balanced, right? So this is going to be my loss. Why is it a loss? Well, if we think about it, what's the net book value? Well, it's my equipment of 400,000, and this is what it was before I sold it, less my accumulated depreciation of 230. My net book value or my equipment net is 170. It was worth $170,000 to me, but I only sold it for 27,000. So I lost money. It was worth 170. I only got 27,000. So I'm going to have a loss of 143. If you want to do it that way, you can do it that way, but I would really recommend it by doing the journal entry. You're going to know if you had a gain or loss pretty quick. But again, with these questions, the hardest part is determining the amount of depreciation you took over the life of the asset. But in any event, I want to thank you for joining me here today. This was loss on sale of equipment, and we've got 2 more parts to go, then we'll be done with the series. I want to thank you for being with me here today. Please leave any questions you might have below, and don't forget to like and subscribe, and I'll see you on the next video. Have a great day.